Hello, everybody, and welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated cryptocurrency, businesses, real estate, defer millions of dollars of capital gains tax so you can create and preserve more wealth, or help your clients do the same. Hey, I'm your host, Brett Swarts. In each episode, I'm joined by some of the best real estate, financial, wealth, crypto, and leadership minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. We're going to be talking about the future of Bitcoin, Ethereum, DeFi, and NFTs. He's a repeat guest now, and he's out of the great state of New York. And he's focused on helping people understand the future of all things cryptocurrency, all things regulation. And he is the chief business officer, for a group called INX. And INX is a digital company and operates a cryptocurrency trading platform, transfer agent, digital asset broker, dealer, and ATS in combination with an inter-dealer broker. And they serve institutional and retail clients across all digital assets. Please welcome to the show with me, Douglas Borthwick. Douglas, how are you doing today?
I'm good, Brett. Thank you very much for having me.
Absolutely. Great to have you back on the show. And for our listeners who maybe didn't see the previous show, which came out about a month ago, you can go to YouTube right now and just search Capital Gains Tax Solutions and Douglas Borthwick, and the show will come up. But for those who are just getting to know you, would you give just a brief background on who you are, and then we'll dive right into the topic?
Sure. Thanks, Brett. I'm Douglas Borthwick, born in Scotland, came to America a long time ago, went to undergrad and business school here. I did 10 years at Morgan Stanley in foreign exchange derivatives, ran a proprietary trading desk at Merrill Lynch, went to Standard Chartered on the Latin America trading desk, and then went to a company called TPICAP, an interdealer broker, where I built a foreign exchange trading system. Since then, I've been with INX for about 2.5 years now. I'm the chief business officer, and we're very involved in the digital space, and happy to answer all the questions you got for me today, Brett.
Yeah, fantastic. And we want to focus on a little bit on the regulation that's happening as well. It's really unique with Douglas is their company INX, which you can find by going to inx.co. INX.co was the first to get an IPO for the blockchain. And maybe explain a little bit of that, Douglas, and then let's start talking about a little bit of some of the headwinds potentially for the regulation that's coming to Bitcoin and Ethereum and other cryptocurrencies.
Sure. An IPO in the blockchain means that we didn't do an IPO the traditional way, which is you go out there in the legacy space, you do an IPO, you raise capital, and you list on a traditional exchange. What we did is we raised money like an ICO, in that we opened up a website, raised money from 7,250 investors in 74 countries. Average age was 42 years old. We ended up raising around $85 million. Now, to get there, we had to put a prospectus together to talk about IPOing on the blockchain. That took us 950 days working with the SEC, a lot of questions back and forth in order to do that. But we ended up finishing it, getting it done, and now we're helping other companies do that and go through the process. Now, you want to talk about regulation? I'd love to. I think we deal with regulators on a state level through MT, money transmitter licenses. And then because of our broker-dealer, we deal with FINRA and the SEC. And with our interdealer broker, we deal with the NFA as well as a registered introducing broker. So I've got lots of different ways that I can help you and discuss with you. Ask away.
Yeah, let's talk about the one that's like most pressing. Before the show, you're mentioning a couple things that you wanted to touch on. What do investors, what do business professionals who help high net worth clients, what do they need to know about what's the current reality of what's happening in the cryptocurrency space, in the investment space for all things blockchain?
Well, I think that your listeners probably, and the folks watching, probably understand what a Swiss bank account is. And Swiss bank accounts kind of fell out of favor a couple of years ago, maybe 10 years ago, when the US realized there was a lot of wealth being held in Swiss bank accounts. And that wasn't okay, because it was wealth that wasn't being taxed correctly. Now, the US government now, I think, looks at electronic wallets in a similar type note, in that there's folks with a lot of Bitcoin and they're trading offshore or even onshore. And yet the government has no idea how much wealth is in these, or if there's any capital gains tax to be allocated. And so they want to find a way whereby they can sort of regulate that, and they can see, what's in your wallet, how much are you making, and what's your wealth. One way to do that is come up with regulation. And obviously President Biden's working on an executive order, but also the SEC is working on this, Treasury's working on this, and everyone's trying to figure out the landscape for regulation. The net of it, though, I think for the individual investor is if you have an electronic wallet or you're trading there at a regulated exchange in the US, you probably have nothing to worry about. But if you're trading offshore and the government doesn't know about it, then there's regulation probably coming down the line. Regulation being, well, maybe if you have an electronic wallet, you hold Bitcoin, and maybe you have to register it somewhat or go through a whitelisting process with a registered broker dealer or someone like that in the United States. And I think that was where things are going, and that today it's a bit of a wild west. Folks are dealing on Uniswap or they're dealing offshore with offshore exchanges. And I think the US wants to bring it inside the US, make it a much more stable or regulated environment. And by doing that, it means that the institutions can start getting involved. Now, some people are going to turn around and say, well, that's not okay. You know, I like my privacy. And I think for the US government, your privacy is probably a secondary issue. What's more important for them is allowing institutions to do DeFi as well, or allowing institutions to come in and trade in exchanges and feel like they know who's on the other side, that they've gone through some sort of money laundering or KYC procedure. And that's where the US government looks like it's moving. And whether it's going to become an edict from the SEC or something that's coming from the executive desk, I think that, you know, it's something that we all have to get used to, but it means that the bigger players are going to start getting involved.
Excellent. So how is INX, but it's INX.co, and the ticker symbol as well is INXD, if anyone's interested in learning more. But how is INX.co helping to, and you guys got the first IPO, but what are the other things that you're doing to try to make it as transparent and as accessible to invest and to cooperate, right? Because you're right, we've got to get all the parties playing well together, right? And we want to make sure. I think you use the analogy that you want to bring the regulators and the people along in the ride, not in the rearview mirror catching up, right? So walk us through what INX is doing, and then how people can get involved or invest or be a part of it.
Well, you know, we went the long way about this. You know, a lot of folks did ICOs, raising capital. I think they raised $25 billion in 2017. We thought that was maybe being done in an illegal manner. When you raise money from the general public, you really have to work with the SEC. And so that long route took us around 3 years. But in doing so, we created a path for folks to be able to go public on the blockchain. And that means that when you hold a security, you actually hold it yourself in a MetaMask wallet or in your own electronic wallet. And every single trade you do shows up on the blockchain, and you can go to etherscan.io and see all the trades that are happening in the INX token today. You're right, our ticker symbol, we've two things. We're listed, our equities listed on the NEO exchange in Canada under INXD, and then our security token that gives the holders the rights to 40% of our net operating cash flow on a cumulative basis is listed on the INX Securities Exchange, ATS. Now, what do we do? Well, every single person that comes to our doors, whether to trade cryptocurrency or our securities, they have to go through a KYC and AML process. And that means that we need to know who they are. And that's, you know, asking for a driver's license and ID, the same way as if you sign up for E-Trade or you sign up at Morgan Stanley. When you go through a broker dealer, you've got to go through certain processes where you have to show them who you are and whether you have assets behind you. And we have to ask you questions about, you know, what's your investing thesis? Are you out there are you a risk taker or are you not a risk taker? You got to make sure that you're offering products to people that they understand that they're buying. And I think there's a lot of exchanges around the world in the cryptocurrency space that don't ask a lot of these questions, that just want to get the volumes in, they want people trading. And that's obviously not something that works in a regulated umbrella. And what INX is doing is it's taking that regulatory umbrella that's offered in the United States and making it available for the cryptocurrency side, but also for the securities side, which we think is very important.
I think that's the most important, right? Because the biggest thing with cryptocurrency, I think, for those especially that are high net worth and are looking at this either for the first time or as a way to diversify their portfolios from all-time highs in the stock market, real estate market, and seeing this as a more traditional asset class, right? They want to know that security is there, right? So you guys are offering, and with your background with Morgan Stanley and everything else, high level of security, or how are you doing that? What are the steps that you're taking, and how does that differentiate from some of the other players that are out there now?
Well, you know, there's many different ways to look at security when you're in the crypto space. One would be the security of someone's wallet. The other one would be the security of your actual security. if you buy a regular ERC20 token or you buy a utility token and it's sitting in your electronic wallet, well, you could lose your wallet. You lose your seed phrase for that, and you've lost it forever. Or someone could hack the wallet and they could take what's in your wallet and make it theirs. Now, we came up with a standard called the ERC 1404 standard for our security token, and we're going to start expanding that into a lot of different issuers. And what happens then is if you lose your wallet or you lose the keys to your wallet, that's not a problem. We can revoke from that lost wallet and reissue to a new one. So you don't have to go, walking through a landfill anymore trying to find the wallet that you lost. Or if you have a boating accident, you don't have to worry about losing your securities. You can't lose your 401k in a boating accident. So that's one thing that we've done. Another is with an ERC 1404 token, it's built in such a way that the only way, if someone wants to move it from one wallet to another, it actually looks into the blockchain, sees if the wallet that it's moving to is whitelisted, and if it's not, it refuses to move. And that's kind of important because I think a lot of people get their wallets hacked and someone will take out the Ethereum from that, or they'll take out the USDC, but the INX token will remain there because it will refuse to move unless it moves to a whitelisted wallet. Now, when it moves to a whitelisted wallet, well, good news, because then it's moved to a wallet that we know the owner of, and we'll be able to, help you if you find that there were some issues. So we're sort of bringing, I guess, security not just to the space in terms of who you're trading with, or at least we know who you're trading with, but also in the fact that we're making security such that they're not like Bitcoin, they're not like Ethereum, in that you could lose them because you lost your wallet. Instead, we're making it such that they could be revoked and reissued. So, hey, good news, you're not losing your 401k.
So let me see if I got that, because I think I'm getting it now. So, I think about the TSA pre-check, right? And I went sat down and I did the thumbs and the thumbnail, and the driver's license and the background and all the stuff that they did to finally get pre-check. It's a couple of years ago, so I don't remember all the process. But the point is, now I can walk through the airport, right, knowing that I can basically get through pretty quickly and not have to do certain other things. So what you guys are doing, you guys are making sure that if the funds are being sent out, that those have been whitelisted or maybe like a TSA pre-check, so that B, if someone is hacked or something does happen, or they're trying to send it off to someone that is not traceable in a sense, where it's lost forever, am I following right, Douglas? Anything I missed there?
I think you're following right. I mean, let's give an example of DeFi. And DeFi is in the title about, what we're talking about here. In DeFi, you've got individuals all around the world trading with each other. They don't know who their counterparty is, but they're doing trades amongst each other. Now, that works for individuals offshore. But in the United States, if someone like BlackRock wants to get into DeFi and start trading with DeFi, they can't, because they need to know who they're trading with on the other side. They need to make sure it's not money laundered money. Now, let's say you create a fence around that, and everyone that goes into that DeFi area has gone through some sort of KYC and AML. And so now they're all known parties, and they're all known to be good parties, or clean parties, I guess would be the regulatory view of it. Once that happens, then BlackRock can come in and start trading using DeFi type products. Now, it already exists. If you go to Chase Bank and you deposit your $100,000 and you get 0.25%, Chase Bank's lending that out at 15% to a credit card user. Now, you don't know who that credit card user is. Chase Bank's taking the difference in the yields, but at the same time, you're happy to do it, and you do it because, well, it's market, but also it's all under a regulatory standard. When you use a DeFi protocol offshore off the US, you don't know who you're trading with. And, I guess it's much less regulated, but also the big boys can't get involved. So once you create a playing field where everyone's gone through this sort of check to make sure that they're, clean individuals, they've gone through the KYC, I know your customer, they've gone through AML, anti-money laundering. And so we all know that they're good parties, good counterparties. Then a lot more people can get involved in this that have a lot more money.
Excellent. So let's now shift a little bit and let's talk about the future of Bitcoin. We saw, values as high as almost 69,000 a coin, and they dropped to about 35,000 a coin. And it's been a swing here in the last few months. Ethereum took a big hit. But yet there's lots of amazing NFTs that are still exploding. So what's just kind of your overall take of the temperature of investing in cryptocurrency? Any thoughts on Ethereum 2.0 coming out? Anything like that?
Well, I'm not going to give you investment advice. I'm not licensed for that. But what I can tell you is that the adoption of Bitcoin seems to be rising considerably. Take India, for example. India pretty much went through a banning process for cryptocurrencies a couple of months ago. And then just 2 days ago came out and said, you know what, we're going to make it legal, and we're going to have this tax, we're going to tax it by X amount. Russia as well. A couple of days ago, everyone thought they were going to ban it. Now they've turned around, they're embracing it. So countries are putting a pause for only a very short time before they then turn around and say, you know what, this isn't it. We're in this for the long haul, and we want our people to start investing in it. Now, when you add populations the size of India and populations the size of Russia in, and you say, you know what, now you can start trading these products, well, it means that adoption is going to start rising. JP Morgan came out today. I think they said that they can see Bitcoin going to 150,000. Now, they also then added another tweet saying, but not in the near term. Maybe it's overpriced around 44,000. Well, maybe they're just saying that because they want to fill their own boots and get, stack their own sacks. But the reality is, I think that institutions and I think, populations and governments understand that Bitcoin's here to stay, and so is Ethereum. And so they need to start getting the regulations behind it to encourage people to be involved.
Yeah, that makes sense. And it's curious how quickly things can change, right? Where an entire country has a stance that's so challenging or banning, like no, it's gone. We're gonna do all these things, and all of a sudden they're flipping over. I also think of China when they cut and become more regulatory on it too. It seems like the trend I've heard, and I'm still a novice at this, that it actually rises. So, any thoughts on when regulatory comes in and tries to ban it or whatever, control it more, that the value goes higher? Any thoughts on that? Because I'm still trying to figure that out, but it sounds, I'm wondering what you think about that.
Well, look, if Fidelity could come in and buy Bitcoin right now, or Goldman Sachs could, they wouldn't be buying it in $10,000 increments. They'd be buying it in billion-dollar increments. And so the more that regulation comes in and the larger players start getting involved, well, the more you're going to see price movement, I guess, to the top side, because they're coming in much, much larger sizes. If you think of maybe the largest institutional player today, maybe it's MicroStrategy, and Saylor's coming in and he keeps on buying the dip, or you look at El Salvador buying on the dip. There's some large institutions and sovereigns that are now beginning to buy on the dip, or certainly take an active role in it. Tesla's balance sheet obviously has Bitcoin on it. Heck, the US government, I think, has $3.5 billion of Bitcoin on it after they found out who did the Bitfinex hack. So, there's plenty of governments that have large balances now, but still the real money guys, the guys that end up pushing the market around, aren't involved. But when they can get involved and they can start buying for their customers and start filling their bags, that's when I think you're going to see absolutely tremendous momentum to the upside. Because there's, obviously there's a limited number of Bitcoin out there. And as demand starts to rise, and demand starts to rise on a very large level, then you're going to see prices higher. If you think about 10 years ago, when the guy that was talking about Bitcoin was in his mother's basement, had 10 followers on Twitter, I was saying it's going to 20,000, and everyone said, look, this guy's a conspiracy theorist. But if you look at it today, you've got the richest man in the world talking about how Bitcoin's going higher. Just JP Morgan coming out today saying it's going to go higher. Today it's mainstream. And when things go mainstream, people start adopting much, much faster. It's like if you take a chart of the cell phone, you look at a chart of the cell phone and adoption. For the first 10 years, no one really cared about cell phones. Then they came out with excuses. If I put a cell phone next to my ear, I'll get brain cancer. Now everyone's got a cell phone. I think that the numbers are, there's 3 mobile devices for every person in the United States. So I guess they count iPads as well. But when adoption happens, and it happens fast, things start moving very, very quickly.
Yeah, I couldn't agree with you more. And we're trying to help people who want to exit those high gains, and we're seeing just a massive amount of people coming to us, especially now that we were, it was a big boom in 2021, and then a big kind of pullback here the last couple months. And so people are trying to figure out ways: how do I sell high? How do I diversify? How do I defer capital gains tax? And so we just did our first couple deals, Ethereum and Bitcoin mainly, both about 12.5 million under management now, deferring millions of dollars of capital gains tax. We're working on one right now that's an NFT sale. And it's artwork that's physical art, but also becoming they're making an NFT, and I'm tens of millions of dollars worth of value, and they're looking to exit with us. But that's typically the biggest frustration, Douglas, is this capital gains tax for a lot of people who want to exit, or how do they navigate that? So without giving up your U.S. citizenship or moving to Puerto Rico, right? I'm curious, what strategies or thoughts have you explored to defer capital gains tax on the exit of crypto?
I'd say that the whales that I know don't actually exit ever. And so they stack, and then what they do is they stake. And when you stake, you actually, you still own it, but you lock it up for a period of time and you get paid a yield. And there's a lot of different institutions that offer you a yield on what you have. Now you'd pay tax on the yield that you earn. There's a 1099 form that comes out for that, but you don't end up actually selling. So if you bought Bitcoin at $400 and now it's trading there at what, 44,000 today, rather than selling it, instead you would stake it. And I know this doesn't help your business, but the only time you pay taxes is when you sell it. And so if you don't sell ever, instead you get yield on it, well, that's always a good way to go about it. And that's what I see certainly base.
Point there, right? Which is staking and stacking. I'm curious on the staking part because I have heard this, and this is cool. And then I'm going to throw another idea at you to see what you think about this. But what happens if you stake? Let's just say you have $10 million of Ethereum or Bitcoin, and you stake it, and the value of Bitcoin when you staked it was 68,000 a coin, and then it drops to 35,000 a coin. Are you subject to margin calls? Are you subject to yield changes?
Sure.
Like
The
what
yield
happens
change,
in that scenario?
Yeah, if I have $60,000 worth of Bitcoin and I put it in and they're paying me 6%, and the price of Bitcoin goes down to $30,000, I'm still getting 6%, but I'm getting 6% on $30,000. And the way that most of these staking firms work is you get paid out on a daily or on a weekly or on a monthly basis. And so it's always going to be based upon, what's the dollar value that's sitting there. Or they'll pay you out 6% of whatever you put down in Bitcoin, but you're getting paid in Bitcoin. And so regardless of where the Bitcoin value is in the market, you're still getting 6% of your one Bitcoin. It's just going to be worth less. And
Got
so
it.
that's how folks look at it on the staking side.
Okay, that's really good. Okay, so here's what I throw at you. Okay, so we're in a series called "It's No Longer About Cash Flow; It's About Tax Flow," right? And the idea is that cash flow is in 1099 and ordinary income tax. That's taxed at the highest levels, right, Douglas? So how do you get depreciation to offset and or let your income tax go to zero? And one way we've, as commercial real estate experts, and that we love, is through multifamily investment properties, which can depreciate over 27 and a half years typically, but then you can accelerate the depreciation. And there's a thing called bonus depreciation. Check with your CPA. We're not giving legal tax advice or CPA on your particular circumstance, but if you do it in certain orders, and depending if you can qualify what's called a real estate professional, you can get your income to go to zero, right? And get basically like tax credits for this. And so one idea I have with our one of our Bitcoin clients, she bought Bitcoin for about 50,000, went to 50 million. She's exited 5 million of that with us, and she had another 45 in there. And she's been doing this staking. She had never sold. Just like you said, they're like most really ultra high net worth cryptocurrency folks never sell. But I asked her, like, what's kind of your goal? Well, my goal is to be tax efficient as I can. I go, well, have you considered going to the Deferred Sales Trust, tax deferred, buying real estate, getting some depreciation, because you can partner with the trust to go buy the real estate, so that when the income's coming in, it's being depreciated. And so it's like tax-free money. So any thoughts there? Did you follow all that?
I followed it and it sounds absolutely fantastic. I'm not familiar with it. I'm familiar with a lot of folks that are in real estate that have gone and bought hundreds of even thousands of multifamily units and talk about how they pay zero taxes and have tremendous income. So, it's incredible, I think, how you can use the tax system to your advantage, but it's not something that I'm familiar with. But obviously, if there's a way that you can reduce the taxes if you do end up selling your cryptocurrencies, then that's probably a good thing.
Okay, so I want to throw one more at you too. Okay, so the other thing we explored was she exited at 54,000 a coin. That was her target rate, and at the point she had about 50 million at 54,000 a coin. So she said, "I'm ready to exit 5, which will make it to 45, right?" And in Bitcoin, the other 5 went to the Deferred Sales Trust with us. That 45 million, at 54,000 went to 68,000 a coin. I remember calling her around like 60,000 a coin, being like, "Hey, like, did you know that we can exit right now all of your coin or a big portion of your coin, put into the Deferred Sales Trust, and then you could actually partner with the trust to buy Bitcoin should it ever drop in value?" Now, I know this is the Monday morning quarterback, but I want to also see what you think about this. So in a perfect world, she would have exited at 68,000 a coin. At that point, her value of 45 would have went up to, I don't know, maybe 62 or so, 65. and now she's tax deferred waiting. Market tanks to 35,000 a coin. She can partner with the trust to go buy back into this Bitcoin, right? And write it back up. And so it's the whole idea of, we call it optimal timing. We call it tax flow, not cash flow, in that we have the ability to offset with depreciation, but also the ability to optimally time the market as best as we can, knowing that cryptocurrency typically has very high ups and very quick lows, and it does this. And it's a lot of it's, at least the people I'm talking about, are pretty predictable. So any thoughts on what I just said? Does that make any sense, or what would you say to that?
I'd say that I look at a lot of charts that are built based upon Monday morning quarterbacking, which means that we can look at it in the past and say, if we'd done this, this would have been great. But I think that what you have to remember is euphoria. And generally, when the price is at 69,000, everyone and your mother's telling you got to be buying here. And when it's at 35,000, everyone and your mother's telling you got to be selling here. So you got to have nerves of steel. The way that I trade Bitcoin personally is that I always look for, when are people telling me that normally they don't get involved in Bitcoin, that they want to start buying. And that's when I start getting out of a couple. And then when it starts to collapse and everyone's telling me that it's a sham, that's when I start accumulating. But I do all of that through a tax-free account. And so that for me is less of a tax issue. But for sure, I think Bitcoin and Ethereum are products where you can play with the euphoria. You've just got to make sure that you take the other side. Because I think you're right in that the market does get over its skis a little bit at times. And then at other times is so fearful that people are willing to sell at all sorts of prices. And if you can take your emotions and park them and instead trade it in a way that's more mechanical, then I think that it can be more powerful. Now, obviously, with the tax type situations that you can offer, that type of swing trading makes a lot of sense. But swing trading as well, for a lot of folks, picking highs and picking bottoms, it's sort of like picking your nose. It's not the best thing.
For sure. No, I couldn't agree with you more. And it's just, it's I guess it's the euphoria of the Deferred Sales Trust, and just seeing so many people feel trapped by that capital gains tax, of the reasons why they don't sell, right? In fact, for her, she worked for a big tech company. She literally never sold anything. And I said, you have like nerves of steel. She's like, well, part of that, but also I understood the future of it. Like I'm in the industry every single day. Like I'm a tech, she's, to me, I told her she's a tech genius, right? So she's a part of it. So she could have this certainty of conviction on the future of it. So she was able to stay in, but she, at the same time, she goes, I also didn't want to sell because of this capital gains tax. So done the staking, but then I found a business to be able to invest into, and that's part of why she ended up exiting and doing it tax deferred. So if anyone's curious about that and want to explore that for your situation, we're happy to do that. You can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. We also have a crypto deferred sales trust mastermind where we try to make this very simple, and it's like a deferred sales trust university class. Totally free. You can go to capitalgainstaxsolutions.com. You can register, where we bring on clients. We bring on financial advisors. Maybe we'll get Douglas on there to be a guest speaker for the class one day. I think that'd be great. And we just talk. And that happens 10 a.m. every Friday, and at 1 p.m. Eastern time and 10 a.m. Pacific Standard Time. You go to capitalgainstaxsolutions.com to register for free. That's capitalgainstaxsolutions.com. That being said, we are over time. Douglas, you want to leave our listeners with one last thought here? We're definitely going to have Douglas back on the show later on. But any last thoughts before we go? Anything else you want to share?
There's a lot of folks that are worried these days, and they say we're raising capital and we want to do a utility token, and they're worried about regulations. And there are simple ways to do capital raises where you can sell just to investors outside the US. It's called Regulation S. And I think that if folks are interested in raising capital, they should certainly get in touch with us and talk to us. There's a lot of exciting opportunities that we can offer them and tell them about. So thank you very much for the opportunity, Brett. It's always nice being on here. Go to inx.co to learn more about us.
Fantastic. Thanks, Douglas, for being on the show. And I also want to thank our listeners for listening to another episode of the Capital Gains Tax Solutions podcast. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to exit highly appreciated real estate, save a failed 1031 exchange, cryptocurrency, businesses, NFTs, so you can create and preserve more wealth or help your clients do the same. If you're listening on Expert CRE Secrets, by the way, we're dual streaming this. We so appreciate all of our folks that are in the real estate world, trying to build wealth, trying to use depreciation appreciation, value add multifamily, anything else, brokerage to help your clients create and preserve more wealth, or do the same for yourself. Please rate, review, subscribe to the channel. Please share this with someone that can inspire and maybe even help them defer millions of dollars of tax. We so appreciate everyone out there, and we